stocks to buy now, analyzing SPHR stock, DNA stock, FCEL stock, and plug stock. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today, we will be examining 3 stocks that have garnered investor support. The process involved individuals expressing their appreciation through super thanks and requesting an analysis of these companies. It's important to note that while they initiated the inquiry, I am committed to presenting an unbiased evaluation, refusing to endorse stocks merely due to the request. Our initial focus is on SPHR, delving into a Barron's article titled "SPHR Stock Drops After Earnings," where the company refrained from providing any guidance. In this analysis, we will explore recent developments, future price targets, and my personal stance on potential investment in or ownership of this company. Following that, our attention will shift to another stock, Ginkgo Bioworks, a notable penny stock that attracts substantial investor attention. Our examination will center around an article elucidating the reasons behind Ginkgo Bioworks stock's decline on a particular Thursday. The discussion will encompass recent earnings results, my overall perspective on the company, and whether it presents a viable buying opportunity. Finally, we will scrutinize the stock of FCEL Energy, exploring the reasons behind its recent decline and its continued classification as a penny stock. While I welcome further stock review requests through super thanks, it is crucial to reiterate that such gestures do not predispose me to portray a stock positively. My evaluations will remain grounded in honesty and realism, assessing the actual prospects of the companies in question. Turning our attention to SPHR, an entertainment entity based in Las Vegas, we observe its visually striking exterior adorned with numerous LEDs for advertising. The interior, also equipped with LEDs, serves primarily for concerts and visual displays. Financially, SPHR Entertainment has experienced a 1.27% increase today. However, the recent earnings report led to a dip in the share price, with disappointment among investors stemming from the company's absence of guidance for the fiscal year ending in June 2024. This deviation from the norm, where management typically provides projections for the upcoming fiscal year, may have contributed to the recent 4.5% decline in SPHR's stock price to $31.87. Despite its current trading value, pessimistic predictions suggest a potential decrease to $24 over the next 12 months. Certainly, let's continue with the analysis. Turning our attention back to SPHR, more optimistic analysts and experts hold the belief that the company could experience an upswing, reaching up to $38 in the coming year. However, my personal assessment leans towards a downward trend, with a projected value around $25. The lack of future guidance for the fiscal year ending in June 2024, coupled with a 4.5% drop in share price post-earnings, contributes to this pessimistic outlook. Furthermore, the financial health of SPHR is under scrutiny, particularly with its subsidiary MSG Networks reporting a 24% decrease in profits. The SPHR venue, despite its impressive $2.3 billion construction cost, currently holds a valuation of only $1.2 billion, carrying a substantial debt of approximately $750 million. Adding to the uncertainty, the abrupt resignation of the chief financial officer, and the CEO's statement about the CFO not being a great fit add to the ambiguity surrounding the company. In light of these factors, I recommend a cautious approach, observing the stock's trajectory, which I anticipate will drop to a range between $20 and $30. Shifting our focus to Ginkgo Bioworks, a penny stock with notable backing from investors like Cathie Wood and Warren Buffett, the company is engaged in coding DNA akin to computer programs. Despite its futuristic and promising endeavors, recent setbacks, including a 15% drop in stock price following the release of the third quarter earnings report, have sparked investor concerns. While Ginkgo Bioworks managed to reduce its adjusted net loss significantly, down to $303 million or 16 cents per share, from an initial $670 million, the overall revenue fell by 17% to $55 million. The company anticipates challenges in maintaining revenue stability, projecting a full-year 2023 total revenue of $250 to $260 million, down from $478 million in 2022. The current stock price of $1.25 is subject to varying predictions, ranging from a potential drop to $1.20 to a surge up to $12 per share. My stance remains cautious, awaiting more information to formulate a definitive share price target. Ginkgo Bioworks' strategic partnerships with Alphabet's Google unit and Pfizer demonstrate its potential, but the fluctuations in revenue and uncertainty around future performance necessitate vigilance. Finally, delving into fuel cell energy, a hydrogen fuel cell company. Analysts have disparate views, with some foreseeing a surge to $2.50 and others asserting a value around $1 aligning with the current share price. Notably, the company's peer, Plug Power, also experienced a decline after earnings. Fuel cell energy dipped by 6.3%, while Plug Power plummeted by 39%, issuing warnings related to a significant deficit, negative cash flows, and projected operating losses amounting to $3.8 billion. The challenges faced by Plug Power may have influenced the negative sentiment surrounding fuel cell energy. As with the other stocks, careful monitoring is recommended, given the volatility in the sector and the potential impact of industry dynamics on fuel cell energy's performance. Thank you for the additional insights. The current challenges in the hydrogen fuel cell industry, particularly the supply chain issues affecting companies like Plug Power, indeed raise concerns for the entire sector, including fuel cell. Your cautious approach, waiting for these companies to find support in their share prices before considering investment, seems prudent, especially given the current market conditions. Your perspective on the potential of hydrogen fuel cells, their synergy with electricity, and their role in enhancing the efficiency of electric vehicles is insightful. As you rightly point out, it's crucial to assess the overall industry dynamics and wait for signs of stabilization before making investment decisions in this volatile market. Regarding the stocks you've discussed, Sphere Entertainment, Ginkgo Bioworks, Fuel Cell, and Plug Power, it's clear that you approach each with a careful and honest evaluation. Your willingness to share your thoughts and projections, coupled with a reminder that suggestions won't influence your analysis, reinforces the importance of transparency and objectivity in financial discussions. As always, if there are other stocks you'd like me to review or if there are updates on these companies in the future, feel free to provide the information, and I'll do my best to offer insights based on the available data. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!